If you were going on a long car journey, you wouldn't leave the house without checking a map first and understanding the general direction, the main roads you're going to be taking, and any twists and turns along the way. Well, in trading, it's very similar. If you're going to be placing a trade, you need to understand the big picture, the general direction that you're going in, and any smaller detail. That's why a lot of traders do what's called a top-down analysis, which means that rather than just looking at the time frame you're entering in on, you're actually looking at multiple time frames to give yourself a different perspective, to look at the big picture and also smaller detail along the way. In this video, I'm going to show you how to do a top-down analysis if you are a beginner trader. So we're going to head over to Thinkmarkets now and look at how to look at multiple time frames to give yourself an edge when you're trading. If you're excited to learn, give the thumbs up button a little hit before we get started. And if you want to make sure you see more content like this, make sure you hit subscribe to Thinkmarkets now. So there's 3 rules to remember if you are doing a top-down analysis. The first rule is that you want to be looking for at least 3 time frames. The second rule is that you want all time frames ideally to be in alignment. There is an exception, and I'll tell you in a minute what that is. And the third rule is that you want to give greatest weighting to the highest time frame. For example, I trade on the 1 minute chart. That means I'm entering on the 1 minute, but I do my analysis as far up as the day chart. So I actually start on the day chart first before I even look at the 1 minute. Then I go down to the 1 hour, and then I go down to the 1 minute. I'm looking for a different thing on each time frame. So remember I said there was an exception to them all being in alignment. That exception is if there's a piece of news which comes out and it goes against the higher time frame, what you're likely to get is a short spike at that time. But remember, it's really important that you understand news releases, economic data, and you are on top of the economical calendar when things are being released, how they're likely to affect the market. And you need to really understand that side of it before you start using it in that way. Another thing to be aware of is if a news release does go against the higher time frame, the move is likely to be significantly shorter than if it was going in the direction. So that second rule still stands, that ideally you do want them all to be in alignment. When they're all in alignment, that's your A+ setup. When they're not, and you make an exception, you may see a small move, but it's not likely to be a really good one. So every strategy and every trader and every market is going to have a different way that they do the top-down analysis, but I'm going to show you how I use it so that you can see for an example, and then you can figure out what makes sense for you on your strategy and on the market you trade. So as I said, I do enter on the 1 minute, but I start on the 1 day. So on Thinkmarkets, you get the time frame here. If you click on that, you can see all of the options. If you're trading on a higher time frame, so say for example, you're entering on the 15 minute, your higher time frame may be the 1 week chart or even the 1 month chart. But for me, the 1 day chart is my higher time frame. So I'm going to click on that, and now we can see each candle represents 1 day in time. So on all the time frames that I look at, I am looking at price action. But on the day chart, I also look for a few other things as well. So on Thinkmarkets, do you see this little candle symbol here? This represents normal candlesticks, which we've got up at the moment. But I like to always check the daily momentum. So I use Heikin Ashi. So can you see it looks slightly different to normal candlesticks, but also a bit similar? So Heikin Ashi can tell us where there is momentum. So you have the green candlesticks, which got a flat base and wick just at the top. See these ones here? This is bullish momentum. The red candlesticks, which have a flat top and only wick at the base, these are bearish momentum candles. And the candlesticks which have wick at the top and at the bottom, they can be either color. These are indecisive momentum candles. If I see indecisive momentum on the day chart, that's a bit of a red flag for me because there is no momentum. If you think that if a market's going sideways and it's got indecisive momentum on the day chart, on the 1 minute chart, what that looks like is the candles kind of just going up and down and up and down. They're not really going anywhere. So often what can push them out of that is a big news release or a piece of economic data or something coming out. But when they're actually stuck in that cluster it's very difficult to get a good trade. At the moment, you can see that we actually have bullish momentum, which is great. That means that the market is moving up, and what we want to be looking for on the other time frames is also bullish signs that we can look for a buy position. It would be incredibly risky if we've got bullish momentum on the day chart to start looking for sell positions. I'm going to give you another analogy which might help this to make sense for you. So if you think of the time frames like an ocean, the smaller time frame is the ripples, the medium time frame is the waves, and the high time frame is the tide. So imagine you're a surfer. You're not even going to be paying attention to the ripples if the tide is going in the opposite direction. So you always want to be giving greatest weighting to the tide, to the highest time frame. Can you see how if you were looking for a sell position on this market, which is just going up and up and up on the day chart, how ridiculous it would be to be super focused on trying to get a sell position? You're going to make life a lot easier for yourself if you're looking for a buy position, if the daily momentum is going up. So that's the first thing you want to do. You want to look on the day chart or your higher time frame, and you can use Heikin Ashi if this makes sense to you, or you can use another indicator which gauges momentum or gives you a certain bias in a certain direction on the higher time frame. So the next thing I want to do is to drop the time frame. So I like the 1 hour chart. I'm going to go to normal candlesticks now because I know what the long-term momentum is. And I find that the 1 hour chart gives a slightly different perspective than I actually get on any other time frame. This is particularly for the markets that I trade, and you're going to notice that every market's different and it's different on different time frames. So it's always worth having a little bit of a play around the market that you trade, the different time frames, and just seeing what makes sense for you. But for the markets that I trade on the 1 hour, I can see the trend in a different way that I can't see it on the day chart, and I can't see it on the 1 minute. It's like a zoom in from the day chart. So you know how we saw for months and months and months, the market was moving up. Now we can see it a little bit closer. So it's almost like we can see the last month in time on the 1 hour chart. And you can see the points where you get these pullbacks. Can you see how this was a little bit of a pullback? It was a little bit of a cluster. We can see it quite clearly and quite nicely on the 1 hour chart. And you can also see when the market breaks out of it. So one thing that I like to look for when I see a bit of a cluster on the 1 hour chart, and this also works really nicely when you actually get a change in direction. So if it's going from a downtrend to an uptrend or from an uptrend to a downtrend, you can actually see really nicely on the 1 hour chart where that cluster is and when the market actually breaks out of it. So what I'm looking for on the 1 hour chart, whenever I see some kind of slowdown in momentum, I'm looking for what I call an imbalance candle. That is a long-bodied candle which pushes the market out of that range. So it imbalances it. So it's kind of like we're moving out of this cluster and we're carrying on. So this can be quite helpful to let you know when you might want to start looking for a possible re-entry if you've taken a pause because the market has taken a pause. So an imbalance candle is a long-bodied candle which pushes out of the range. So I can see a little bit of a range here. Now we don't actually get a very long candle. I can see this is quite a nice one here. But what I'm actually looking for really is I'm looking for the highest point of the range to actually be broken. So a useful tool is to just draw on a horizontal line, and then you can actually see the moment that the body of a candle breaks that point. In an ideal world, you would use a wick to show you the highest point of the cluster, but you would then use the body of a candle to show you when it breaks out above. That's because the wick actually shows us price rejection and uncertainty, whereas the body shows us certainty. So that's what I'm looking on the 1 hour chart for. Now let's drop down to the 1 minute chart. So this is where I would actually take an entry into a position. On the 1 minute chart, as this is the one that I'm actually entering on, I actually look for more things on this time frame because this is my real sniper entry. So I'm looking for price action ultimately I'm drawing on my levels from the day chart or from the particular day. I'm looking at yesterday's high and low, the high and low of the previous session, and I'm drawing on those levels, and I'm really looking for the small detail on the 1 minute chart for an exact entry. So now you understand the basics of how to do a top-down analysis if you are a beginner trader. The next step is to look at your strategy and the time frame you're entering in on, and how you can actually add more time frames in your analysis to give yourself an advantage. In particular, remember, you want to look at higher time frames, as you always want to be giving greatest weighting to the highest time frame. Once you've established how you can add time frames to your analysis, you can then test out your strategy on a simulator. So the Traders Gym at Thinkmarkets is excellent. It's a simulator which uses virtual money, meaning that you can test your strategy to see how effective it's likely to be before you go live.